Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide online valuation services for mediation and litigation based in St. Louis, Missouri. Today, we will discuss Donald Trump's tax return, and it's really a case study for divorce attorneys and what to look at in a personal tax return with Jason Soman. He's a valuation expert in Boca Raton, Florida. He owns his own firm, Accounting and Valuation LLC, and he's specializing in business valuation and forensic accounting in the context of divorce. Welcome, Jason. How are
Thank you,
you?
Melissa, for having me. It's a pleasure to be back on.
So now we're going to go to a Schedule C. And so if you're doing a divorce and you own a business, you could either have a business tax return that sits out there in La La Land and you file with the IRS, right? I'm sure you'll tell us more about those.
Mhm.
Or you could have a Schedule C. What the heck is a Schedule C, Jason?
So Schedule C are either sole proprietorships or single member LLCs. When you think of your typical LLC, you think of a one-man doctor's office or, a hot dog stand. And in this instance, it looks like they run a plane through the Schedule C. And I just think it's funny because I think that, we have this preconceived notion of what Schedule C businesses are, but the super wealthy, they do their own thing, right? They have different plans, and I've actually seen this before, with other super wealthy, and there may not be anything illegitimate about it, right? Like maybe they used it for business purposes and this 160 is actually, just reimbursed for flight charges, right?
Right.
So it may be legitimate, but where there's just like the trust, right? Where there's planes, there's flight logs, there's all types of good, types of discovery that you could get. Also what's important with Schedule C is that you don't have to file a balance sheet with your Schedule C. So, and this is any Schedule C, no matter how big or small, you don't have to file a balance sheet. And I'm sure as a valuation professional, the balance sheet's really important to valuation. There may be, let's say there's a plane in this entity, right? There's a plane that we need to worry about. There's potentially liabilities. There could be a cash account. There could be a bunch of other fixed assets besides a plane. But you're not going to get any of that from looking at only Schedule C. So I think the moral of the story for Schedule C is that they may not be what you expect, right? Like this is a plane company. B, what you do get on Schedule C is incomplete. You're going to have to get a lot more information. But something that I've made a mistake on when I was coming up in the business that I think other people should know is, right, like if you report on Schedule C, there's going to be no tax return for that company. So like don't make a motion to compel discovery on getting the tax returns for DT and Tever One LLC because they don't exist.
Right.
So I think that's important, right? Because no one wants to look stupid, asking for documents that don't exist. And also, what we see here is, right, $160,000 in gross receipts. We don't know who that $160,000 came from. Did that come from Trump himself? Is this an actual business entity that serves customers? I mean, my gut tells me it's not, but it could be, right? I mean, we don't know where this. I mean, you'll see here. It looks like 160 in, 160 out. We don't really understand the true nature of this business because this $160,000 number, this is a summary level number, right? Like we will need extra documents such as general ledgers, maybe even account statements to see which entity did this money actually come from, or what person, and where did this money actually go. So I think that Schedule C, it gives you some good information, but it requires an additional level of due diligence and discovery in any instance. I just thought it was interesting that there was a plane on this one, but often you'll see small businesses, single member LLCs on Schedule C.
Well,